Is the picture any different today than it was back then?
They're coming off of a much higher valuation earlier in the year. I think there's an element of the price cut around their core bike product that's acting as a stimulant of demand in the core bike product. And the Tread is now back launched and in the market, and there's marketing dollars going behind all of their products into the holiday period. So there's really two stories we're looking for tomorrow night. The extent to which they can lean in and stimulate demand through pricing mechanisms and marketing mechanisms versus the broader macro element of the world is slowly reopening and working out at home is not as easy a sell as it was 12 months ago. We don't yet have quite the visibility we want to be either highly convicted, buy rated or sell rated. So we currently have a neutral rating with a 110 price target. But those we see as the two major debates that the company's going to have to address Thursday night with earnings.
Right. I mean, I'm thinking back to actually pre-IPO days when it was seen as a tool of the elite and you had to have a lot of money even to get one in your home during the pandemic. How much can they lower price to make it more accessible even in the face of these input costs?
Well, I do think they've now addressed the bike product in a way where the pricing is the best product in the market at the lowest price point. So we actually do believe management's being shrewd there by taking profits where they generally earned more money than they had expected during the pandemic period because they had to spend no money on marketing. And they're basically reinvesting those pandemic profits, for lack of a better term, back into positioning their bike product to be the best in class at the lowest price, which could stimulate demand and could pull forward additional levels of folks into their ecosystem that maybe at the time of the IPO, folks were less willing to underwrite that sort of addressable market. So I think that dynamic is going to be an interesting one to continue to watch.
Eric, I want to shift gears over to Facebook and get your perspective here. You reiterated your buy rating, but you talked about how this is a company that faces headwinds from Apple's operating system change, and also they're now spending $10 billion a year to invest in the metaverse, which has no revenue or profits for the foreseeable future. Why are you so optimistic on this stock?
Well, I think the stock is a reflection of a couple of key concerns. I saw in an earlier segment you had Matthew Ball on. Matthew and I have spoken a lot over the years about where the metaverse is going in a lot of different public forums. I think the metaverse is an interesting call option. It's not one I'm necessarily going to ascribe a lot of value to today. But if we take the losses in the metaverse today and put them aside, Facebook trades at 11 times operating profit on 2023, x these investments in the metaverse. That makes it one of the cheapest stocks, especially measured against any level of growth, let alone mid-teens or 20% plus type growth in their advertising business when you look out over the next 2 to 3 years. Unlike other companies in the digital advertising ecosystem, Facebook has been worried, concerned, flagging this for investors, and investing a lot of money in transitioning away from Apple's tracking mechanism for most of the last 12 months. And if you go back to the earnings call from just a little over a week ago, Sheryl Sandberg flagged that a lot of these issues should be sorted out as we move through Q4 and into the first half of next year. So they still have a scale of audience. They still have a scale of first-party data, and they still have a depth and breadth of advertisers, we believe 10 million plus, that could allow this advertising business to continue to compound despite some of Apple's privacy changes. Obviously, there's a whole host of headwinds and noise in the broader political realm as well. And then there's clearly some call optionality building around the metaverse for the long term.
Eric, while we have you, I just want to get your take on a sell rating that you have on Airbnb reporting after the bell tonight. What's your thesis there?
Yeah, just so we know, they report after the bell on Thursday night, not tonight. But yes, we are sell rated. I just didn't want to mislead anyone by telling someone it's happening tonight. I would say generally our call there is this was a pandemic winner. not to bring it back to where we started with Carl on Peloton, and we think a normalization is going to happen in the travel industry more broadly. Number one, a normalization of the way we travel, and two, a normalization of the way we work, and a normalization of supply. So you have a whole host of supply in the travel industry, hotels, cruises, casinos that are desperate to get people back to a certain level of capacity utilizations. And we think this company benefited from a period of very long duration stays at very elevated prices in the summer of 2020 and 21. And that's going to normalize in lower growth, less profitability as you look out to 22 and 23. And yet the market is sort of ascribing a low double-digit revenue multiple to that dynamic. And that seems offsides to us. Hence, we find the risk reward to be more negative skew on Airbnb from current levels.